Good morning, fam. I wanted to go over the economic data and the earnings reports that are coming out this week so you're prepared. And the data matters more than ever this week with everyone eyeing the 10-year treasury, guys. So it's going to be a very interesting week. I am sensing more downside with stocks personally, okay? But anything can happen, obviously, to change their narrative. But right now, it looks like there won't be a cut. And I don't think much this week will change that unless inflation comes in way lower than expected, which I don't think that's a reality. But here's what's happening this week. So Monday, tomorrow, we have the New York Fed one-year inflation expectations. And previously, it was 2.97%. And I expect this to be higher now, obviously, with what's been going on. So talking about something in the lower threes now for one-year expectations. Obviously, that could start the market off in fear, okay? So just keep that in mind. That's Monday. And then we also have KB Homes earnings on Monday as well. And then on Tuesday, again, I wrote this down so don't miss anything. So Tuesday, PPI, which is the producer price index. Remember, this is what the business or company pays to make a product, okay? So PPI month over month, 0.3% is what's expected versus 0.4% prior. So when I say prior, it means the month before is what it was. And then year over year for PPI, 3% is expected versus 3% prior. And then core PPI, which strips out food and energy, as we know, year over year is 3.2% expected versus 3.4% prior. And then core PPI month over month is 0.2% expected versus 0.2% prior, okay? And then Wednesday, we have CPI. So PPI is actually before CPI. So if for some reason PPI can come in lighter than expected, that would be great to get, a little bit of, positive sentiment back with the 10-year treasury falling, okay? So usually PPI is after CPI, okay? But in this case, this week it's before, okay? And actually PPI last month was what came in hotter. So if we can show some cooling off from last month's numbers, that could give a little reprieve to the markets or a little, again, hope, right, that inflation can be tamed. So CPI is first on Tuesday. And then Wednesday, CPI, month over month expectations are 0.3% versus 0.3% prior. And then year over year with CPI, I saw one source say 2.8%, another source said 2.9% for expectations versus 2.7% prior, okay? And then core CPI, year over year, 3.3% expected versus 3.3% prior. And then month over month, 0.2% expected versus 0.3% prior, okay? And then earnings on Wednesday include BlackRock, Citigroup, JP Morgan, and Wells Fargo. So again, big bank earnings start Wednesday, okay? And then on Thursday, we have retail sales, which month over month, it's 0.5% expected versus 0.7% previously. And earnings that day are Bank of America, Morgan Stanley, JP Hunt, PNC, Taiwan Semiconductor, United Health Group, and US Bank Corp. And then Friday, we have industrial production. And month over month, it's expected at 0.3% versus negative 0.1% prior. And then housing starts also month over month, 2% expected versus negative 1.8% prior, okay? So that's what's going on this week. Again, I'm taking a cautious approach, okay, until we see this 10-year treasury come down, which means we're going to have to see some sort of weaker than expected economic data.